So once again, good morning to everybody. Thanks for being on time. My apologies for being late myself. All right. So we have the plan with regards to the next couple of weeks. We're basically there. We're almost home free. But I know, of course, we have that big thing called the exam before we are quote unquote free. All right. Anyhow, so pull it back. Anybody trying to come in? No? Okay. Take a sip of this. Okay, so we recently finished budgeting. Now, as we know, when you make a budget, you're making a plan of how to spend a particular resource or how to apply a particular resource, if you prefer that word, okay? Because we have different resources. Usually people think of budgets in the context of financial, of finance, and they think of budgets and money. And yes, for sure, right? But we also saw we could use budgets for the quantity of materials we may need to purchase or the quantity of units we may need to produce. But of course, there's always a cost attached to these things. So inevitably, money and costing will come into it. All right. Now, as you all probably should have, you probably have a plan, a study plan, right? What you're going to study each day, at what time, for how long, etc., etc. So you are planning to use your resource of time and, of course, energy. All right. Anyhow, before I trail off. Now, when you set your plan, your budget, and then you execute, right? I know some of you are probably doing MOB and probably entrepreneurship. Oh, hey, Mekai, morning, how you doing? Right? Yeah. So you all know, there was this thing I learned in MOB back in the day, right? Called the Shewart cycle, right? It was PDCA, right? I started my field. Yeah, PDCA, plan, do, check, act. And that's basically what the budgeting and variance analysis is, right? So you make your plan. That's the planning, of course. Then you execute, that's the doing part. You have to actually do what it is you say you're going to do. Otherwise, what's the point, right? Then you had to check. What does that mean? Okay, I planned to study accounts, unit 2. I planned to study variances Saturday morning, 10 a.m. to 12 p.m. So we did, and we checked. What happened? Well, we actually started 20 past. Okay, why? That is a very important part. We have to ask, why did this thing not go according to plan? Right? The reason is because the babysitter again ran late, so I left home late because I didn't want to leave my wife with the 2 babies, right? So I got normally I get home over 9:15, and I'm able to start on time, even 9:30 sometimes, right? I got home, but my class studied 9:45. So I came downstairs, I set up everything on time. My mom made some breakfast for me, I shoved it down my throat, and I came downstairs, right? Okay, cool. So we checked. We didn't meet the plan. Now we have to act, right? The last piece there is the act or analyze and then act, right? Okay, we know why we went wrong. How are we going to fix that next time? Well, we have to look at the variables under our control. Do I have any control over how soon the babysitter gets here? Well, if I'm going to pick her up, then yeah, I have control over that. But if I'm not, and she's traveling, right? And normally she's accustomed going on a particular time, or she calls a TT ride share, whatever the case is, right? So all of that stuff I have no control over, right? And especially if there's traffic, right? Like yesterday, for example, I was coming back home from town and I saw a lot of traffic, and I realized that what happened in the opposite lane, somebody had shut down. And you know what's happening, Trinidad? When it can have 3 or 4 lanes and they're all full of cars, and if one lane closes for whatever reason and everybody has to filter into the other lane, well, you know what happens? It's traffic back up the wazoo, right? So, okay, there are variables over which we have no control, and there are variables over which we have control. And it's a very important thing to draw and understand that distinction, right? And even like I said, even though I said, well, I have no control over how soon she comes, I could go for her, right? I could throw Shiloh in the car. Well, not throw him. I could put him in the car seat and take a drive, pick her up, and then bring her down, right? I could do that, right? Now, so sometimes you have to examine and analyze your fundamental underlying assumptions, right? This isn't under my control. Okay, well, could it be? Anyhow, before I go off on a whole different tangent, right? So budgeting is where you set your plan. Then you have to execute, you have to produce, etc. And of course, you're going to record all those things. Then you have to check your actual output, what actually happened, check it against your plan. You have to compare, right? The C could also stand for compare. Because then, if you don't, what's the point of making a plan, right? Well, okay, we could have other points, right? But when you check it against a plan, okay, did we go according to plan? Yes, okay, great. Can we improve and make it even better? Yes, okay, great. No, okay, no problem. This works for now, right? And if it didn't go according to plan, okay, why, right? So that's where the variance analysis comes. Now, this thing here is a kind of two-part thing. It's a standard costing and variance analysis, right? On the last part, we'll get back to this now. Give me one sec. Right, so we have a couple of things to explain. We have to explain the standard costing part of it and the variance part of it, right? To me, budgeting and variance analysis are kind of like, I don't want to say two sides of the same coin, but they kind of go hand in hand. One facilitates the other, and it's a feedback loop, right? So it's not that these things are static and modular. They can be taught that way, but I don't think they should be, although that might be what I'm doing, right? But you should be able to see the link between them and how they interact and how one influences the next one, all right? So when we set a standard, right? When you think of standard, what comes to mind? You might say, okay, the furniture store in Trinidad. Okay, not that kind of standard, right? But even then, their names for something, right? A standard is a particular level. You can say a particular level of quality, right? Because, for example, let's say most of us in Trinidad, we eat doubles, right? And most of us have a particular doubles person that we go by, and we buy that doubles, right? Like my stepson, he likes to go buy Darren's doubles with his pops, and he's a man, he wants to eat at the double stand, because a couple of times we buy doubles for him when he's home by us on the weekend, we bring it back, like, bag doubles? Me, I want no bag doubles, that's trash. And like other times I carry him out, I say, hey, look at that doubles that you want. That doubles look like trash. And I'm like, you are 10. You're talking about look like trash. Now, a couple of times he was right, because where the person was, to me, didn't seem too clean, but that's a different story. Anyhow, right. So you have a particular standard. Hey, Gabe, what's going on? Good to see you. Sorry, one of my wife's friend's sons. Anyhow, yeah. So a standard is like an acceptable level of quality, right? So standard costing, right? So when you have a standard cost, that is a cost that we set. We say, hey, this is the standard to which we are trying to adhere. That's the target. That is the benchmark is the next word people like to use in conjunction with standard costing, right? That is what we are aiming at. That's the plan, right? That's what we have to achieve, right? And then we do. So that's like, this is standard costing as part of the budgeting thing, right? Sorry. I don't know why. Right, so standard costing is part of your budgeting thing, right? That's how you're going to get the standard cost. You have to look at, okay, what was done before? What are the actual costs now? How does this fit together? Can we achieve this based on the past? Right? That's part of your planning process, part of your budgeting, right? Because a budget is a plan, right? And your variance analysis, that's the checking and acting part. Well, more the checking part, right? Maybe not so much the acting, but we could discuss that later, right? So when you check your results against your plan, when you check your actual against your standard, you can see, hey, we budgeted that each of these units would cost us $10 to make, but it cost us 12, right? So we had a variance, an upward variance, let's just say, right? I know that's not the correct term because most still have done this topic before. Some of y'all might not have done it. That's fine, right? It varied above. It varied above what we had set as a standard. Okay, why? Well, it turns out when we were checking the prices, we checked from an old catalog or an old part of the website, or the company hadn't updated their website. So when we called and when we actually ordered, we got the updated prices. So you say, okay, so it wasn't really a problem on our side. We took the information that they gave to us and we made a plan. Unbeknownst to us, prices went up, right? So, okay, cool, right? Or maybe we budgeted 10 and we came in at 750. And when we analyze, and like, hey, okay, well, how come we had this 25% saving, this 25% below, right? That's great. It cost us less than we planned. So if we sold at a particular price, so let's say, for example, we had a standard cost of $10 per unit. I'm saying, okay, based on the cost to cover the profit we want to sell at $25, right? Okay, so you're making a $15 profit, right? Again, that could get eaten up by other expenses, right? So now when your costs come in 25% below per unit, you're like, hey, well, we make an extra $250 in profit. Why? Can we actually make more, or is that a one-off thing, right? So you say, okay, well, what happened was we had enough money to buy at a particular quantity that enabled us to get a purchase discount, a quantity or volume discount. You're like, I like that, right? So can we do that more? Well, they say, well, we had the funds available then, we do have it now because other expenses came up, right? So we could spitball this thing wholly, right? But long story short, the standard costing is the process of, and I'm going to give these notes. Now, I'm actually thinking just to maybe just copy and paste these notes and give it to you guys, all right? just for the sake of, because we started late, I kind of want to get more to the calculations, right? So because basically what I said here was a very abridged version of the notes, right? We're talking about ideal versus attainable standards. Okay, all right. Okay, so let me see, and then we have 1, 2, 3, 4. Okay, so even if I have an hour after, all right, that's okay. All right, okay. You know what? Yeah, let me type it out, right? Okay, so a why am I in bold? Yeah. So a standard can be thought of in different ways. Okay, cool. So as we said, it's a target for performance, right? So it's a set way of doing something, right? A certain level of quality or craftsmanship, right? Or an expectation that needs to be met. Sorry, give me 1 sec. I just want to check something real quick here. There you go. All right. Lovely, no problem. We're good to go. All right. All right. So a stand. Did I have a space there as well? I did. I know something looked a little off, right? A standard cost, right, is a target cost per unit of output, right? Standard costs can be set for both materials and labor, right? So you see, it comes back to that thing I told you all since we started Unit 2 accounting back in September. You have 3 components of costs. What are they? Materials, labor, and overheads, right? Right, overheads. So, yeah, so overheads can also have standards applied to them. Right. I'm gonna be real honest with you all for a minute. I was never really taught the overhead variances, and usually when I pick up things pretty quickly, especially with accounts and maths, right? Overhead variances has never been something that's clicked with me, right? But I have gone at it, and I have some notes that I use based on some notes I got from a text, some other stuff I found online, and some stuff that I think my teacher kind of corroborated with me, and I am confident in them. All right, so I lean heavily on my notes in that particular. 1 sec. Our parent this message, man. She's clearly yeah. Right, so setting a standard cost entails research and analysis of current costs of inputs, predicted trends for inflation, current and future economic conditions, production processes in use, right? Changes in technology. I'm gonna put that's because that's a big one now, right? Wait, why do I have a semicolon there? Oh, that's why, because I tap right there. Right, and assessment of impact on the production environment and processes on workers. Right. So, like we said, a standard is a target, and setting a standard entails research and analysis, right? So, of course, we look at what are the current costs, right? Are they predicted to go up? for example, one of the things, of course, a lot of people talking about now is in the United States, their president has put like these reciprocal tariff things, right? Now, I didn't really go into it much, but people are saying it's going to cause costs to go up, right? Current and future economic conditions, right? So that, of course, for example, when COVID hit and things had to shut down, that caused an economic decline in quite a few places, all right? And then some people say that some countries still recovering from it. Some people say people still all kind of madness, right? Production processes. What are your techniques? What are you doing? Can it be done better? Right? Changes in technology, right? So, I mean, as we said with AI, that's gonna change a lot of stuff, guys, right? Assessment of impact on the production environment and processes on workers, right? So, is your production environment, for example, a lot of students in Trinidad still have classes that don't have air conditions and have fans that don't work and breeze don't blow. So, if you are in an uncomfortable environment, you probably, even if the teacher was quite dynamic and you like them, if the place was too hot and uncomfortable, you probably couldn't focus that well, right? On the flip side of it, some schools have air conditions and they are set very cool, and the kids are all have hoodies on, and it's uncomfortable from the next direction because then they end up falling asleep because they're too comfortable, right? So, what is the impact of these things on workers? Sorry, let me just message the parent. Okay, cool. Okay, now we have to talk about something, concept called ideal versus attainable standards. Right? Okay, cool. Sorry, before I go on, just give me a quick G if you guys are good with the notes and explanation so far, please and thanks. If there's anything you want me to dig into a little bit more, give me an R for re-explain. All right, cool, thank you. All right, lovely. So 9 out of about 11. All right, next two, let me know when you get a chance, right? Okay, cool. Okay. I need 9. Okay, cool. Glad to hear you're good. Okay, so right, so ideal versus attainable, right? So as we know, sometimes parents, when you're studying, have this expectation that you might wake up at 5 in the morning and start with by 5:30, and you'll study straight till 5:30 in the evening. Like, yeah, that's not realistic. That's not happening, right? Even with me, when I was in UE and I was home, because I was way more productive home than on campus, I can tell you that point blank, right? I would get up at 6 when I was home, and I would start work by 7. Sorry, no, I like 8, right? So I give myself time to have breakfast, time to eat, time to have a shower, maybe even exercise, whatever the case was, right? I'd start work at 8. I'll go from 8 to 8:45, take a 15-minute break, and then repeat. 9 to 9:45, 10 to 10:45, 11 to 11:45. So I work like a 4:45-minute sessions in the morning, right? I'd take an hour and a half for lunch. I would start back at 1:15, and then go to 2, then 2:15 to 3, whatever, to 4, and then to 5, right? So, and then I would take a break from 5 to maybe 8, and if I had work to do, I'd go again, right? But that's because I had built up the stamina to do that, and I had an environment at home that was supportive of doing such, right? I didn't have a whole set of extra responsibilities to handle, right? Like some of you all do, right? And I was very fortunate in that regard. So I know there's a saying, check your privilege, right? So, I mean, everybody in different circumstances, so you had to make it work for you, right? But anyhow, so I had set that ideal and I was able to attain it because I made it was realistic for me, right? So when something is an ideal, it assumes perfect conditions. As we know, conditions are often not perfect and things happen that you don't expect, that are unforeseen, or even if you foresee them and they happen, sometimes they may have ramifications beyond what you would have considered, all right? So attainable standards are standards that are a bit more realistic. Now, if you might say, okay, well, what's the point, therefore, of ideal standards? Well, it's simply an ideal to which we can strive, right? We may never get there, but if we allow ourselves to focus on only what's attainable, right? what happens as the saying goes, sometimes if you aim for the moon, you might, or the sun, you might reach the stars, or whatever the case. Aim for the stars, you might reach the whatever. I'm not sure what it is. But basically aim very high. So if you don't attain it and you fall short, you still achieved a good bit, right? So because you say if you aim too low, then you're bound to achieve it, But that's a whole different story. Sorry. I listen to plenty motivational stuff and psychology, and well, not psychology, but performance stuff on YouTube. So they have lots of different philosophies, and I just like to go on tangents, but let me try and stay on target right here, right? Anyhow, so an attainable standard is one that is a bit more realistic than ideal standards, right? And it is put there also as a standard. I want to say a minimum acceptable level of performance, right? So basically, what we want is we want at least the attainable, right? But we also want to try to push so we get better, so that the attainable level keeps rising within reason, all right? For example, when you start off studying, you probably mightn't be able to do what I did, right? Basically study for 4 hours in the morning, 4 in the afternoon, maybe 2 extra at night, right? That mightn't be attainable for you at the outset, like somebody going to the gym. You mightn't go to the gym and start benching 450 pounds and squatting 500 pounds. No, right? You might need to be able to do a push-up. Okay, so you had to start somewhere. You had to start at a level that is attainable. And you hit that target and then you move it up slightly, right? Even if it's 1%, then move it up 1%. If you compound 1% over the course, there's a book I read called Atomic Habits. And then there's another guy, that's from James Clear. And there's another guy called Stephen Bartlett who runs the Diary of a CEO podcast, which is one I would encourage you to listen to. And also some of his business stuff, right? He put out something called the 1% diary. And of course, the concept is if you improve by 1% every day and it compounds, you would be 37 times better by the end of the year, right? 1%, which is 1/100th, right? If it compounds, right? So not just adding 100th. So at the end of 100 is you have 1. No, it compounds, right? So it has a multiplicative effect or an exponential effect, right? So you want to keep improving, all right? Anyhow, again, I losing going down rabbit holes here. So, so ideal standards assume perfect conditions and perfect knowledge of all factors affecting the production process and inputs. Right? So you see what it assumes here. Perfect conditions and perfect knowledge of all factors, right? So there are no machine breakdowns, nobody ever gets sick or tired, right? We know everything about the inputs, like the material prices are going to continue to be the same for years to come. We know that, etc., etc. We know exactly how to deal with AI, blah, 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 right? Now, these standards are seen as unattainable because in reality, unforeseen situations arise. Right? There's human error in the production process and circumstances. Spell that incorrectly now. Circumstances beyond reasonable control can occur. Cool. As such, the use of these standards, the use of these standards can be demotivating to workers. They may believe that no matter how hard they work, they will never be able to get the job done to management's satisfaction. right? And attainable standards on the other hand, right? On the other hand, right? Make allowance for the things that ideal standards do not. And as a result, one second. Why are you taking so long? Let's check it. I may have to pull this down a little bit more. Right. Right. And as a result, usually viewed more favorably, sorry, by workers believe that they may actually get the job done within reasonable. Oh, I guess I didn't have to. I'm not sure why. Okay, right. Okay, so that is the ideal versus attainable standards, right? Okay. Now, like I said before, and I'm not seeing any notes here, ideal standards, right, are something that they could strive towards because you never know what you can achieve until you try and then you try again. Now, let me just give you a very brief story. I don't know how many of you all might be into track and field or running, but you probably know who Usain Bolt is, right? I mean, that was 17 years ago. So you're probably born around 2008, all right? Maybe 2007. So you might know in 2008 he won, and then 2012 again. So you might be more familiar, right? But even before him, Roger Bannister, right? So there was this thing about running a 4-minute mile. I think it was 4 minutes, right? Nobody could do it because it was physically impossible, and if you did it, your heart would burst, etc., etc. And there was this, along came this guy called Roger Bannister. He basically ignored all that. Like, I can't do it. And for the whole of, well, I guess you could say recorded history or human records, whatever the case was, nobody ever ran a mile in 4 minutes or less. And then Roger Bannister, one day, he achieved it. And then, not long after, I think a month after, somebody else broke his record, right? And then the following year or something, there was a race, and two people in the same race, 2 or 3 people in the same race, also ran sub 4 minutes. They actually broke the record that was set after Roger Bannister, right? 3 people in the same race, right? So basically, it's like there was this prevailing knowledge and belief that, hey, this can't be done, right? And there's a saying that says that all behavior is belief driven. If you believe something, hey, Pre-Devi, good morning. If you believe something can't be done, why would you even try, right? They say all progress depends on the unreasonable one, right? So sometimes we have people who like, I don't care. Like, for example, Elon Musk wants to go to Mars, right? I'm pretty sure other people have wanted to, but the cost was probably prohibitive, etc., etc. So he was like, I don't care. I go in, right? So, right? Because I mean, look at these steps, these strides he's making. I mean, ignore the politics for now, right? Look at these strides he was making with, like, he launched a rocket and then caught it when it came back, and he caught it with chopsticks, right? I mean, he blew up quite a few trying to figure that out, right? But that's how we keep pushing the boundaries of what's possible, right? Anyhow, so all that to say, when somebody says something can't be done, they should probably get out of the way of the person trying to do it. All right. Anyhow, so do with that what you will. So I have this one more little paragraph. Okay, it's not a paragraph. One more page of notes, but it's not. You know my style. It's basically one more of these to go, right? Okay, that's great. Yeah. So variance analysis. Okay. So if the page would render, that would be great, right? So I have it kind of like in bullet points. There's one, maybe 2 slightly long parts. Would this be uploaded on my channel? Yes, it's actually. Hey Dex, thanks for the love. Yeah, so TikTok Queen too. Yeah, it will be uploaded there, but it's not gonna stay there long. Okay, so let's go. So standards, right, are set for the cost, price of inputs, and for the quantities of inputs as well. Right? So the entity then attempts to meet its production targets using, these standards. Actual costs and quantities are recorded. A comparison of the actual costs and quantities to set standards is undertaken. Right. All right. So a compare. So you set your standards, right, for costs and for quantities. Then you produce. So this is your planning. This is your doing. Right, you're recording, and then you compare, check, right? So you compare your actual cost to the set standard, the standards that we set, all right? So this, this comparison is called variance analysis. One sec. Okay, that's fine. Oops, what happened there? Sure, right. Okay, a variance is any difference between the set standard and the actual price / quantity. Right, we measure variances for direct materials, right, direct labor, and overheads, where the actual cost / quantities were greater, so where the costs were greater than the set standard, right? This is known as an adverse or favorable variance. Right? So if you spent more or used more than you planned, right? So you didn't stick to your standard, you actually exceeded the standard, right? You went over the cost and over the input quantities, then that's unfavorable or adverse, right? When or where the actual costs or quantities were less than the set standard, then this is known as a favorable variance. Sorry. Cool. So let's put in a little separator there. So what's going to happen is we're going to actually, when we do the calculation, we're going to either get a positive or a negative figure when you compare actual and standard, right? And in some cases, it's going to be adverse, and in some cases, it's going to be favorable. Now, the kind of weird part about it, and this is just probably a me problem, right? This mightn't happen for anybody else. So I'm actually a bit hesitant to even tell you about the little issue I have with it. Because next thing you didn't know about it and it doesn't affect you. All right. So my little pet peeve is this, right? Normally when we see an A and we're looking at a grade, A is good. And normally when we're looking at a grade and we see F, F is bad. So to me now, when I had a look at variances and I see A, like, hey, A is good. Like, no, A is adverse. Like, oh yeah, for real. And when I see F, oh God, F is bad. Like, no, F is favorable. That's good. Like, oh crap. So I kind of prefer to use the U for unfavorable because we could kind of link U like with CSEC grades or CXC grades. I don't know, that's a bad. a bad thing. The F is still in my brain as a bad thing, but I don't know. Again, it might just be a me problem, so hopefully it'll pass it on to you. All right. Anyhow, so there's a couple more paragraphs here, and we get into the working, right? So in and of themselves, right? Variances are not necessarily good or bad, right? So this is where the analysis of the variance comes into play. Right? We need to know why the variance occurred. Sorry. Right? In order to be able to either fix it or replicate it, right? It being the performance. Right? So if you had an unfavorable variance, can we avoid that? If we had a favorable, can we do that again? That's what replicate means, right? So it may be the case that the standard was poorly set, and as such, right, reflected adverse variance that was not the fault of either materials or labor. In such cases, the standard needs to be reviewed and brought more in line with real world information. Right? In the case of replication, sorry, 1 second. Yeah, so if you have a poorly set standard, then you have to fix the standard. So if your plan is bad, you need a new plan. All right? You can't keep holding people to unreasonable standards. I mean, again, like I said, the 4-minute mile thing, maybe it's just a belief problem, but there could be other aspects of it, right? Suppose now somebody wanted to run a 3-minute mile, right? Now, I don't know what the record is right now, so I don't know if somebody actually has currently run less than that, but I just say that as a thing, right? So maybe something actually is impossible for now, right? Anyhow, right? In the case of replication of good performance, right? We may need to analyze certain factors such as the quality of the materials used, the supplier of the materials, the level of training of labor, the level of motivation of the workforce, and other such factors that affect actual performance. This process takes time and, of course, effort. And is perpetually ongoing, right? So what we're saying is that it kind of ties into what you guys might know as something called a culture of continuous improvement, right? So it's not that, hey, we set this standard, we hit it, cool, let's do it again. Okay, we hit it again, okay, cool, all right. Automate, autopilot, we are what you set and forget, right? Now, there are some things with which you can do that. Sorry, 1 sec. Yeah, there are some things with which you can set and forget, and there are other things which you should not set and forget, right? Especially in the face of changing economic conditions, geopolitics, changing face of geopolitics, all that kind of stuff, right? Because we really don't know, anything about the future, and we could hazard a guess, and we might be right or we might be wrong, but anyhow, right? So that's the notes for today, right? So now we're going to go on to the calculations overview. So next page here, asking calculations overview. Then we're going to do an example of the materials variances. I'm going to give you guys one to try. And then we're going to do the labor variances, an example. And then you guys are going to get one to try. And then I see in 2 more pages here, but the workings are not put in. So I guess that's like homework for you all. Right? Again, I don't really enforce homework. I would encourage you to try it. But I also have to try because clearly I didn't do it. Right? The next day I just kind of went into the overhead variance, which I will do on Tuesday. And or we might do those same homework questions, then go to overheads, and then Thursday we'll hit some past paper questions. All right? Because by the 29th we will probably be done, to be honest, right? In terms of also having covered capital budgeting. Okay. All right, so variance calculations. So I left a lot of the kind of stuff there, so I didn't have to type over everything. Right, so when we are doing the calc, now again, this is the method I was taught, this is what I like, this is what resonates with me. You may have been shown something different in school that has already resonated with you, that you like. If so, please continue to use it. Don't, for my sake, try to figure out something new. If it's not clicking, it's not clicking. If it's clicking, cool, I hope it does, all right? So again, what are we trying to do here? We're trying to compare the actual cost with what it was supposed to cost, right? So the actual cost of the output is the actual quantity multiplied by the actual price, right? So price by quantity. Hey, you know how many units you made? Well, we made 1,000 units. And what was the cost per unit? Well, $10. So how much you spent? 10,000. All right, cool. Now the standard cost, right? So the standard cost of budgeted cost. Okay, so how many you made? The actual quantity was 10,000. What it was supposed to cost? What was the standard cost? Well, it was actually supposed to cost $8. You're like, oh, so what happened there, right? So the price variance is the difference between the actual cost and the standard cost of the output. So you're taking actual quantity times actual price, and you're minusing this actual quantity times standard price, right? So basically, you're just taking these two things here and you're comparing them, right? Now, this next line here is purely optional, right? But you know me, I like my maths. So you can factorize here. Unless I hear that term, boy. So you can take your actual quantity and just do actual price minus standard price, right? Now, some people will say, but sir, in school I learned standard minus actual. Again, if that's working for you and you already latch on to it, then by all means, please use that, right? I kind of prefer this because it shows what you actually spent, right? So what some people, again, if they put the standard, if they put the budgeted figure before and the actual after, that's what they prefer. If you like that, then please continue to use that. Sorry, I'll check something real quick. Ethan, crash course for CSEC. Yeah, starting Monday. Ethan, you need to DM me immediately to get signed up for that. All right. Sorry, I didn't see a comment earlier. Hope you're still there. What one? See if I can find them. All right. Okay, cool. So your price variance. So again, if you look in the bracket, right? If it's the price variance, that's what's going to be in the bracket here, right? Your actual and your standard price, right? Now, the standard cost, so sorry, the next thing we have is the quantity variance. So how many units did you use? Like for example, let's say we normally use, let's just say 10 units of material to make 1 unit of output. And then when you check it out, you end up using 7. You're like, wait, how we coming at 7? And the production crew is like, well, the material you're not buying, I mean, you spend more on it, right? So remember we said earlier, maybe it was supposed to be like $10 per unit, and we're not spending 12 or whatever the case was. They say, yeah, well, you spent a little more money, and the material we get was real good. So we didn't have much wastage. We were able to use less of the material to make each unit output. So it turned out good. And you're like, oh, so it paid to spend a little more money then. And they're like, yeah, it paid to spend a little more money, right? So what's going to go here is standard quantity. Sorry, I don't know why I put keep it double. Standard quantity times standard price. So what we were supposed to produce and what it was supposed to cost, right? So that's going to go here. So the second and third column were actual quantity, right, times standard price, right? This is standard quantity, right, times standard price. All right, and again, purely optional. If you look at it, standard price is the common factor. It's actual quantity minus standard quantity. And again, is a quantity variance. So you're actually comparing the quantities, right? And now, the total variance is the price variance. So this beast here plus this beast here, right? And what you might notice is, actually, I'm just going to put it down, right? Right. I'm just going to rewrite it, right? The actual quantity times actual price, right? So the price variance, so actual quantity times standard price, plus, let's shift and enter. Plus, no, Beavis. Plus, right, right, so actual quantity times Tims, clearly Tims. Price minus, nope, nope, not you. Go back, right? One second. Yep, didn't work. Yeah, guys, I think I hit an wall. Anyhow, standard quantity times standard price. Okay, so if you look at it, this item here and this item are the same, except that one is being subtracted and one is being added. So imagine this by that is the same as this. So if you're adding it on one case and subtracting it in the next case, this is going to cancel. It's like if you had a minus 1,000 and plus 1,000, that's just going to cancel. So all you're really comparing is the first item and the last item to get total variance. But again, sometimes you want more context and detail when you're analyzing. You want to dig into the details. Why did this happen? So your middle term becomes important, right? But once again, what it really does boil down to, for the total variance, is actual quantity times actual price minus standard quantity times, oops, not teams, right? This, let me zoom out a little bit. A bit more. Yeah, 140 could work. Sorry. Right, so I want to send this to you all. Bit of a dinosaur. Times. Why did it not go? What tell you? Bit of a dinosaur. Okay, cool. Right, so I don't expect you all to memorize these formulas right off the bat. It took me a while to get into, right? Variances was not my favorite topic when I was in school, right? Over the years, I've kind of grown to love it a little bit more, all right? So what we're gonna do is we are going to apply what we just saw there to some, hold on, what are these things here now? These anything? Yeah, maybe later, right? So what we're going to do now is we are going to apply what we just saw to a question, right? Let me just check and see, are these things visible enough? Okay, it looks all right. Okay, so direct material variances example. So we're going to use Sanko, and Sanko has developed a direct materials standard of £3 per finished unit at $5 per pound. So for Sanko, right, this company is making a product, and over the years they have developed this standard, this materials standard, direct material standard for their product, right? It is £3 as the quantity at $5 per pound. So each of these things here is a standard, right? And it says during a recent period, the following activity took place, right? Cool. So direct materials purchased and used in production, £6,000 at $5.10. Now, right away, what you might notice is that the standard price is $5 and the price we actually paid is $5.10. So right away, you say, hey, that price variance is going to be adverse or unfavorable because no matter how many units we buy, we're paying a higher price for each unit. All right. And production completed 1,900 units. Okay, so we have those things kind of boxed off in some colors there. Now, when you read your question, I agree, sometimes it's difficult to understand what's being told to you and to understand what they want, right? So they want us to do the materials variance analysis. So we need two sets of variances, price and quantity. So again, I like to kind of do three sets of calculations, right? One for the actual, one for the standard, and one for the, well, the hybrid of the two, right? And if you look at it, it takes the leftmost item here, the rightmost item here, right? So the item on the left goes on the left, the item on the right goes on the right, okay? Cool. So check this. Actual quantity by actual price. The actual quantity is £6,000, right? And we're multiplying that by the actual price of $10 per pound. $6,000 by 5 is 30, and 1/10 of 6,000 is 600. So this is 30,600. So it cost us, the actual cost for the actual production is 30,600, right? Okay. Now, what we're going to compare it to is the standard price. Now, we were supposed to spend $5 per pound. So we bought how many pounds? 6,000 pounds, right? At a cost of $5 per pound, right? And yeah, 6,000 by 5 is just a flat 30,000, right? Okay, so right away, you can see we actually spent 30,006 versus the 30,000 we had budgeted. All right, so we're going to put that here. So 30,600, sorry, not 600, minus a flat 30,000, right? And that's going to give us 600 variance, which is unfavorable. So we spent more. We spent more than we were supposed to, right? Now, again, some people like to put this figure in the front. If you did 30,000 minus 30,600, you get a negative 600. Okay? If you get a negative 600, then it automatically kind of says, hey, a negative is bad. So you put unfavorable. So the way I do it, that doesn't happen. So you have to know, hey, this way it tells me I spent more than I planned to. So in that case, I know it's unfavorable. So again, there's no one right way to do it. So I leave you to select how you would like to do, right? Okay. So we have the price variance, right? So again, just to recap, we took the actual quantity by the actual price. What was in the orange here? We multiplied price by quantity. And then we took the same actual quantity of 6,000 and combined it with the green price, the original price, the standard price, right? Now, clearly we spent more than we had budgeted, and the total price variance was 600, the total in terms of the volume of the purchase, right? Now, the quantity variance, right? So now we're looking at standard quantity. Now, 6,000 pounds. What was the standard? Now, we made how many? So check it. So in some of the questions, most of them, you're actually going to have to do some extra calculations. This is one of them. So they gave us how many we actually purchased. Now, how many were we supposed to purchase? That's the question. How do we figure that out? What's the standard? Normally, we would use £3 per finished unit. And we made 1,900 units. So 1,900 units, right? And this is £3 per unit, right? So 1,900 by 3 is 5,700. Sorry. So check it. We bought £6,000 and used that to make 1,900, but we were supposed to use 5,700. So right away you could see we used more than we were supposed to. All right. So that we know we're going to get an unfavorable variance, but let's work out the full thing. So we were supposed to buy £5,700 to make 1,900 units. 1,900 being the actual production, eh? Right. So not budgeted production. So 5,700 pounds multiplied by $5 per pound. So we were supposed to do that. Right? So 5,700 by 5 is 28,500. Okay. So now we're going to compare this to this item here. Let's see how that goes. So 30,000 minus 28,500. So that's going to give us 1,500. And that's also unfavorable because we spent more than we should have. So once again, with the quantity variance, we're trying to see how many units of materials did we use for production. We produced 1,900 units, and the standard quantity of materials per unit of production is £3. 1,900 by 3 is 5,007. We multiplied that by the $5 per pound, the standard cost, and got this. So our production of 1,900 units was supposed to cost us 25, right? Now, the actual quantity was the 6,000. So again, here, we're doing the quantity variance. So we're comparing the pounds. So we were supposed to buy 5,700 pounds at 5. We actually bought 6,000, right? And again, we're comparing it with the 5 here because we did the quantity variance. So we're holding the standard price fixed, right? So we spent 30,000 and we were supposed to spend 28,500. So we clearly have an unfavorable variance. Now we are going to combine those two variances down here. All right, so we're going to take the 600 unfavorable and add the 1,500 unfavorable. All right, and we're going to get 2,100 unfavorable. Right, so that's how I like to explain my variances. One second, I just have to respond to the review. So I'm going to take a picture and send this in the chat. Where are you? So what if one of the variances was favorable and other was unfavorable? How do you class the total? Right. So that's an excellent question. So is this going on YouTube? Yes, it is. Yeah. So what if one was favorable and one was unfavorable? So for example, let's say this was favorable here. Oh, sorry, my bad. Let's say this was a favorable variance, right? So if you had a 600 and a negative 1,500, because that's basically what it is, a negative 1,500, right? So 600 positive, 1500 negative, you'll have a negative 900 as unfavorable, right? If, however, you had, let's say, a 1500 favorable variance and a 600 unfavorable, you would have more on the favorable side. So the overall favorable variance would be, the overall variance, would therefore be favorable because you'd have more favorable than unfavorable. All right, so I hope that answers that question. I think I do have one for you all to try. And this one has a favorable and an unfavorable. All right, okay. Before I give you all the question, can I just get a quick G in the chat if you're good with the example? If there's any aspects you need me to re-explain, give me an R. If there are any questions you have, please let me know, right? And it's perfectly normal, especially with variances, to have questions. Right? I had a ton when I was in Form 6. I was like, so why do we do this? So why do that? And so it was like, follow the process. I'll explain after. But he did explain before too. It just didn't click. All right. Okay, you're welcome. Very, very good. Glad to hear that. Right. Would you be doing more topics before the paper 2? This is the second to last topic I'm doing. This is variances. The next and last topic would be capital budgeting. You can actually find some replays on my YouTube channel of a couple of the classes we did. But those are going to go away on the 30th, actually 27th of April. So make use of them before that. That's not for you all. You all have access to everything all the time. Okay. Okay. All right. So what I'm going to do, I'm going to go to the next page. Right. So we'll take a read, right? And what we'll do, I'll give you a couple of minutes just to try some stuff, and then we'll kind of step it, right? So materials. Okay. So actual. So 460,000 pounds purchased and consumed at a cost of 320 per pound. So that's your actual quantity and your actual price. Standard. So we were supposed to use £5 per unit at a cost of $3.25 per pound. So right away, what you can see is that we actually paid less per pound than the standard. So you know your price variance, your price variance is going to be favorable, right? Now, they talked about 460,000 pounds they purchased. That's the actual. Now, it says compute variances. Look, don't worry about materials, right? Actually, was this? No. Okay, right. I have the labor one for this question on the next page, right? So compute variances for materials, for labor. So you're doing materials, right? Assuming 90,000 units were manufactured. So I'll help you out here, right? If you manufacture 90,000 units and each unit used £5, so to get the comparative figure to the 460, you'll multiply the 90 by the 5, right? So just pounds. Yeah. Right. So your standard was 450 for quantity, yeah? So if you actually use 460, we use more than the standard. So we know for the quantity variance, we're going to have an adverse, right? So I will leave you to it. When I say, I want you to try the question, all right? Long story short. Okay. Oh, no. Okay. Crash course for CSEC PUA. I am. It starts on Monday. So Tanisha, what you need to do is you need to DM me. Do you have an Instagram or TikTok? Either of those, right? Or email me, right? Because sign up has been happening since January. Now, it's not like a whole set of people, eh? Right now, I think I have about 15, 16 people. So you can get in. Okay, I put a zero instead of a O. So it's supposed to be .com, right? Chris at adaptuation.com, not C0M. Sorry about that, Tanisha. Right? But yeah. The crash course is 8. I'm doing 8 days, right? Monday to Thursday next week, and then the Tuesday to the Friday the following week. Each day is going to have 2 sessions, right? Two-hour sessions. And it's not like optional. You come to both of them, right? But they're also all recorded, so you could always read the replay after. Right? So you're getting 32 hours of class. And if you pay by Monday, you get for 640 TT, which is a steal of a deal. Just answer a message here and then it's an issue, no problem. But message me, right? I'll give you my WhatsApp and I'll send you details there, and you could forward them to anybody else who you think might be interested. There's people still messaging here. Do that after. Right. Okay, guys. So I'm gonna start here because I want to do the example for the labor and give you all the question to try. Of course, that'll take some time, right? And of course, that E25/6 I would like to do, right? But I don't intend to rush anything. Yeah, actually, that's the one that you might get for homework, right? But again, I'm not. you know me, I don't force homework on anybody because I know you all have plenty of other things to do. If you can do it, cool. If not, we'll just do it next class, right? But I know next class I want to do the variances. Let me just see what I have as a recap here. If you open, that'd be great. Hey, open. Yeah, that's what I did. 25, 6, yeah, I did it the next class. Yeah. All right, so that's the recap. Okay, right, cool. So then that's what we'll do. You all could do it for homework. I have the solution. You can message me, or you could wait till Tuesday, right? But yeah, cool. All right, so let's get it. So okay, so for the actual quantity by actual price, we have the 460,000 pounds times the 3.2 per pound. Okay. Right, and that's going to give us 1,472,000. Okay, cool. Right. Now the actual quantity by standard price is the same 460, but by 325, right? So 460,000 times 325, right? And that's going to give us, sorry, equals first, right? 1,495,123. Right. So as you can see, we spent less, right? So this is where people don't like how I lay out my stuff, and I'll show you. You might agree, and you're free to do so, right? Hold on. Sorry, something going on. Sorry. Right. So the variance. So if you subtract a bigger number from a smaller, you're going to end up with a negative 23. Right. Now this is favorable, and it's favorable. It's favorable because you have a savings. Basically, you spend less than you actually budgeted to. You spend less than you were supposed to, right? And that's where people don't like my format, because they associate negative things with unfavorable, which is quite correct. That's totally understandable. So that's where my thing runs into a problem. But this is just how I'm accustomed doing it. If you don't like that, that's not a problem. You fix your mix. You do it how it makes sense to you. All right. So the standard quantity by standard price, right? So that's 450, right? We were supposed to use 450,000 pounds to make the 90,000 units, right? This was at a cost of 225, right? Right, and that's going to give us 1,462,500. Right, so as you can see, 1495 versus 1462, we spent more. Right, so 1495, 462,500. And that's going to give us 32,500, but unfavorable because you spent more than you were supposed to. All right. So this is the question when you were asking just now. So here we have a bigger unfavorable variance than the favorable variance. So when you combine them, the net effect will be negative or unfavorable, right? 23,000 favorable plus, or if you want, you could put minus the 32,500 unfavorable, right? And then I'll be saying, but Chris, you had the minus here, but a plus here. So what are we doing, right? So again, that's up to you how you choose to present it. Hold on, why did it do that to me? Oh, okay, cool. That's fine. Right, and then there's 9,500 unfavorable. Yeah, so that's the part that's give people some trouble too, right? When you have differing variances, one favorable, one unfavorable, right? So again, just look at the quantity of each of the variances, the size, the magnitude, right? If you have a bigger unfavorable and favorable, then the total or net variance will be unfavorable. If it was the next way and you had this was the favorable and this was the unfavorable, then the total variance would be favorable. Okay, can I just get a G in the chat if you guys are good with the workings and what's on the screen? Right, if you need me to re-explain or clarify anything, give me a R, please and thanks. Okay. Send a picture this in the chat too, right? Yeah. Right. 8. So 8 out of 11. Okay, the next 3, let me know, please and thanks, if I could help you some way, shape, or form. All right, okay. So it's going to be a little bit of a tight squeeze here, but I think we could do it, right? Okay. So this is the labor variances example, right? Now, it's not really going to differ from the materials except in name and, of course, some words. Let me explain. So assume that Sanko has established the following labor standards for each unit of completed product, right? So direct labor, 2 hours at $9 per hour. So that's your standard. You're supposed to spend 2 hours per unit, and the cost is supposed to be $9 per hour. So basically what you're saying is that your standard labor cost per unit is $18, right? 2 by 9. Now, in producing the same 1900, so we're going back to Sanko, right? 1900, right? In producing the 1900 units, so 1900 units, direct labor incurred total 4,100 hours. Now check it. 1900 by 2 is 3,800, eh? $1,900 units by DLH. DLH is direct labor hours, right? So this is, so sorry, no, hours. Right. So you're supposed to use 3,800 hours, you use 4,100. So we know that the efficiency or quantity variance is going to be negative, right? Or unfavorable. Now, the cost was $8.80 per hour. Now look at it, the standard is $9. If the actual is $8.80, then we already know, hey, we spent less per hour. Now we use more hours. We use 300 more hours, but we had a saving of 20 cents per hour. So, right, we know the price variance is going to be positive, right? Now, okay. So in this particular case here, right? So we have 4,100 hours times 880, right? So 880. That's going to give us 36, right? Now it gave us that here, 36,080, right? So 36,080. And the actual quantity by the standard. So we use 4,100 at a cost of 880 per hour, but it was supposed to cost us $9 per hour, right? So 4,100 direct hours times 9. Right? And that's going to give us 36,900 total. Now look at that. You spend 36,080 as opposed to 36,900. So your price or rate variance. So just by the way, they usually refer to the direct labor price variance as the rate variance because your labor rate is the rate of pay. That's the price of labor. Okay, cool. So we're going to have 36. Sorry, 1 second. No, right. 36,080 minus 36,09. Sorry, 900. Right, so that's going to give us 820 favorable, right? So 820 favorable, right? Because you spent less than you were supposed to, okay? Now for the standard, so again, we were supposed to use 3,800 hours, right? At a price of 880 per hour. Oh, no, 9, sorry. See, I get tired already. And that happens, so you had to be careful, guys. See, it happened to me just now. So you had to pay careful attention. You had to know what is actual, what is standard, and put it in the right place. I mean, of course, you had to know your formula, right? So that's going to give us 34,200. Right. Now, when you compare that to the thing here, we know it's going to be adverse because, and again, it has to do with the quantity, right? So they call this the efficiency variance, right? Sorry. Right. So we're going to compare 36,900 with 34,200. That's going to give us 2,700, but unfavorable, right? Unfavorable because we spent more than we were supposed to. So now, when it comes to your total direct labor variance, we have an 820 favorable, and we have a 2,700 unfavorable. Now, I don't think there's any mystery that we're going to definitely have an unfavorable variance here overall, right? Right, and that's going to be 1,880 unfavorable. Cool. Right. So this once again, right? We have to read your information, plug in your stuff correctly. Now, what I could also advise, if this helps you, is you could head up like AQ, AP, SQ, SP, and that kind of stuff, and fill in that stuff on top here, right? Like actual quantity was the 4,100, right? The actual price was 880. Fill up yourself. Right. And of course, you could also put standard quantity here, standard price here. So the standard quantity was the 3,800 hours. The standard price was $9 per hour. Right? So you could line up your stuff or identify them explicitly, right? If that helps, then do it. All right. Find what works for you, right? This is your job, right? The funny part about it is we think the job is to learn accounts and that kind of stuff. Yes, don't get me wrong. Accounts is nice, it's necessary, it's a good thing to know. What your job is here is to learn and to learn how to learn. Right? Now, if you want to become an accountant and this is part of your stepping stone, then yes, this is your job to learn accounting. But if this is just something along the way, right? And that's what most of the stuff you learn in school will be, something along the way. Your job is to learn how to learn, right? Especially in this day and age of AI, right? What is it called? What do you call it? So Shada, we are actually doing Keep Accounting. This is Unit 2, Module 3. This is Standard Costing and Variance Analysis. 1 second, guys. Mom is calling. Hello? I had to get, but I have to talk to someone and see what she wants. So if you get in for you, you could go ahead. Thank you. Okay, no problem. I here till about 12:30. So if you come back before that, that's good. Okay, cool. Yeah, sorry guys. That just cross-checking. Yeah, so yeah. So your job is to learn how to learn and to apply your skills to whatever is in front of you. Now, of course, it's nice when you have a choice in what you pick to learn sometimes. Other times you don't. And that's just going to be reflective of life. Sometimes in life you don't have a choice over what needs to be done. Right? Your choice is always do it or don't do it, yeah? Right? But you understand the consequences based on your choice. That you can't really escape that. Anyhow, enough philosophy. Right. So if you guys are good with what's on the screen, just kindly give me a quick G in the chat, please and thanks. All right. If you need me to re-explain anything on this particular page, let me know. Give me an R. Right. But if you're okay with it, that's great. Right? Happy to hear that. Okay. All right. So what I want to do, I want to put up on the screen the question you're going to try for me now, right? Which is this one here. Right. So this is the continuation of the question you all did, which is you didn't get a name before, right? So this is oh, you don't have a name either. Right. Anyhow, so this is the continuation of what you guys did, right? The direct labor variances. So direct labor Actual labor 17,800 hours at an average wage rate of 1840. So actual, right? So if you want to put it here, so actual quantity, actual price. What? That. Right. So the actual quantity is 17,800 labor hours at 8.40 per hour, right? Direct labor hours. Okay. And then for the sorry, yeah, DLH is direct labor hours. So standard quantity, and then standard price. Right. So standard is 0.2 hours per finished container at an average wage rate of 850 per hour. So 850 is your average. Right. Now the standard quantity here, it takes 0.2 hours per unit. And we made 90,000 units. Right? So in both cases here, your quantity was higher. The standard was higher for quantity and price. So in both cases here, you might have a favorable variance. I'm watching, I'm watching the wrong thing. Yeah, everything here was favorable. Let me just jump back here to the example real quick. Okay, we're good. Right, okay, yeah, guys. So I can give you like 7, 8 minutes at most to calculate the stuff there, and then we're gonna go from there. Right. Tajel, Vivo. I hope I'm pronouncing that right. Tahel, Tajel, Tajel. Right. Okay, cool. So shall we? All right, let's organize and call it a day. Okay, so actual quantity is 17,800 hours. I'm just going to leave out the units, right? I'm multiplying that by $8.40. What? Uh-huh. Leave it. We multiply that, we get 149 sorry, 520, my bad. Right. Now, the actual quantity by standard price, so the same 17,000 800 multiplied by 850. So that would be add 1780. So 150, 151, 251, 3. Yep, there you go. Cool. Right. Now you could actually calculate this one right away. It's not a problem. It doesn't matter the sequence in which you do it, to be honest, right? This is the same 18,000 multiplied by the 850. Yeah. Right. 153. Okay, cool. Right. So we could see we have favorable right through. Okay, cool. That's cool. No problem. Okay, cool. So 149, 520 minus 151, 300. 159. So that's 1780. That's favorable, right? Because you spent less than you were supposed to. So you have money left over, right? So right, and then we have the 151, 300 minus the. That's of course 1700 favorable because you spent less than you were supposed to, right? And when you combine everything, right, 170 favorable and 1700 favorable, you get 3480 favorable. All right. Okay. So can I get a G if you guys are good with that solution? Please and thanks. If you need me to re-explain, that's not a problem. Yeah, R. This. All right, so I'm going to send this PDF, what we did today, to y'all. A link to the replay as per usual, and I'm also going to send E256, right, which is Banner Company, right? So it has materials and labor variances. Just feel to practice. If you don't do it for homework, it's not a problem. I'm going to use that to kind of start up your next class and what you call it. Just use that to kind of warm up and enter. We have class next on Tuesday, right? So I'm seeing here we're going to the overhead variances. Yeah. And then we have some past paper questions to take a swing at on Thursday. Following week, we will start the last of the stuff, which is capital budgeting. And I'm budgeting 3 sessions for that, as well as an extra Tuesday when the term starts back. Like I said, hoping that you all could actually make that one, which is this Tuesday here. Right? I don't know if you guys have exams already starting then. I hope not. If not, let me know. I'll buy the bullet and do the class on the Saturday, right? To save us having to do the Tuesday. I actually would like to have that afternoon off. And again, I think I might try and basically put a Cape Accounting Unit 2 crash course there. And we'll do 6 days, 4 hours each, and as many past paper questions as we can do. And we'll do it not per year, but we'll do it like by question. So like we take 2024, question 1 and go back. Well, question 1 and go back from 2024 as far as we can. All right. Anyhow, folks, that's about it for today. If anybody has any questions and they get to ask in class, please feel free to let me know. If you have any suggestions about the timings, I know 1 or 2 y'all said they couldn't make these sessions during the Easter. Sorry about that. Right. So you had to watch a replay. Sorry. But yeah, but let me know if you guys have any input. All right, guys. Have a good weekend. I'll see you all on Tuesday, 4 to 6. Bye. All right. Thanks very much. Bye bye. All right, guys and girls. Take care. Bye. Come on. Later. Okay. Going to stop the recording. Tajel. Hey, Tajel. On the ball, boy. What? You know your things. Nice. All right. Okay. All right, yeah. Okay. I hope I pronounced the name correctly, Tajel. Right? Yeah, you know, thumbs up, right? What was that from before? Okay, cool. All right, so you do your thing. And you could always DM on Instagram, TikTok,